By creating a separate monetary policy committee, having a press conference after each rates decision, and putting a focus on employment as well as inflation, the new look Reserve Bank will mirror some of the key aspects of the US Federal Reserve. So let's bring in here Adam Creighton, Washington correspondent for the Australian newspaper and a contributor here on Sky News. Adam, thanks as always for your time. You saw the Treasurer in Washington just a week ago when he was there for the G20 finance ministers meeting. You also wrote about needing budget repair requiring years, he was saying at that time.
Well, look, I think the Treasurer was just being honest, really. I mean, there hasn't been a surplus in Australia, I think, since 2008, the first year of the Rudd government, or the last year of the Howard government. There's been deficits every year. I mean, I get the sense both sides of politics have basically given up on the idea of surpluses. And it's important to remember that most Western governments had and have. I mean, there hasn't been a surplus in the US, I think, since Bill Clinton was president. And I think you can say much the same about the UK and certainly most European countries as well. So whether that's a good or bad thing, I mean, it's probably bad, but it's just the reality of our time. The zeitgeist is that democratic governments don't run budget surpluses, and they just hope that that's going to be fine in the long term. I think most hard-headed economists would say that that's not fine in the long term. I mean, Australia's gross debt has just surged extraordinarily. I think it's to something like 63% of GDP now, where it was about 40 or so before COVID. That's an enormous increase. We can pay the interest at the moment. Let's hope that continues.
OK, so Adam, what it also does, though, is puts enormous pressure on the central bank. Going back years and years ago, the central bank, did its thing, but it was barely heard from. Today, it's central to people's lives and central to the conversation. So even these changes, quite clearly, are fairly significant. But that's because the central bank now has much more to do than it used to when governments at least would achieve budget surpluses from time to time.
Yeah, certainly, that's right. If you go back to the 1980s, I don't think central banks even made a press statement when they changed their policy. It was all very secret, and most people had no idea what central banks did. It's certainly a lot more transparent. It's a lot different now, and I understand from this new reform that the government's trying to shift the Reserve Bank's governance structure to be more like the US, more like the UK. That's fine, but it's not clear that it's going to improve the economic outcome, I would say. There was nothing inherently wrong with the way Australia did it. I mean, you can just as easily point to mistakes that have been made in the UK and the US by their supposedly more expert governed central banks than the Australian central bank. I don't think the RBA has done a bad job. I mean, maybe I'm biased because I used to work there and I still know some of the economists, but I think this is a cosmetic change. It's a political solution to the perception that Dr. Lowe made an error. I mean, I disagree with that. I don't think he really made an error, but certainly there's a perception he did. And there's a report now, there's going to be a change, there's going to be a new board, which I just think is going to be another group of 10 economists with a new part-time job, paid by taxpayers, to look over the shoulder of the RBA, which already has hundreds of highly paid economists thinking about monetary policy 40 hours a week. I mean, do we really need more of our smart people in our society looking at monetary policy? We already have an enormous number doing so.
Well, the one thing as well is that there has been suggestion this week, probably reasonable suggestion, that the fact that the Treasurer is looking for bipartisan support, Angus Taylor, of course, also there, giving tacit support so far, whether it's actually just deflecting some of the blame away from government and its inability to balance the budget back onto the Reserve Bank and saying, look, it's all yours to actually try and monitor and therefore adjust the trajectory of the economy.
Yeah, look, I think that's a good point. I think there's certainly part of that. I mean, at the end of the day, it's governments that borrowed all that money during the COVID pandemic, especially in Australia. I think if you add up, a federal and state borrowing, it's something like $400 billion of extra borrowing. And largely, just like in other countries, central banks accommodated that. They created the new money for the government, and it's now in the economy, sloshing around, and it's creating inflation, which we're still dealing with here and back in Australia, 7%. I mean, you could actually, argue that this inflation is the biggest economic cost and even social cost of the pandemic. It certainly didn't happen at the time, but people's real wages are going backwards. People are becoming poorer, even if they don't notice it. every day in their lives. They are, and that's got huge consequences. If you just look at airfares, for instance, I mean, they have just soared extraordinarily. I mean, people cannot travel as easily as they used to. I mean, you know, before 2020, you remember you could fly to London for $2,000 return. You certainly can't do that now, and it's even worse over here in the US. So this is pricing, you know, middle-class families and poorer people out of travel, and that is, at least in my view, a direct consequence of the pandemic policy and all this money creation.
Okay, so then one last part about this, and that is that if government really gives up the ambition to try and fight inflation, even though, yes, we know that the central bank can move, if you like, prices and or move spending more rapidly with interest rates, but the fact is, long term, it's got to come down to government responsibility as well to share in that burden of trying to address inflation, not overspending, not over-borrowing.
Yeah, look, I think that's true. I think central banks around the world right now are just hoping and praying that these recent signs of a fall in inflation will continue and they won't have to lift rates much more. Because I think if they do lift them much more, there will be serious consequences for the real economy, for ordinary households and businesses. They don't want to do that. I think they want to take a breather, so to speak. That's what the RBA's done. I think here in the US, there's going to be one or two more rate rises, and I think they just want to leave it there. But at the end of the day, you're right. I mean, it's the government that owns these central banks. I mean, they're not, you know, we say they're independent, but they're creatures of government, they're creations of government. And ultimately, at least I think behind the scenes, they'll do as they're told. If the government wants to, run huge budget deficits for years, then the central bank of that government is going to accommodate that. That's just the reality of how government works. And so I think there needs to be more focus on, what the government's doing around inflation than the central banks.
I'll tell you what, Adam Creighton in Washington, always good to get your input, and many thanks for your time today.
Thanks, Ross.